Hi everyone, today I want to do a short video on RSI, what are the insight to RSI and how you can use it in terms of looking at your charts. Okay, RSI over here stands for Relative Strength Index, okay, and it's an oscillator and you can use RSI in a few ways. Okay, RSI, it being an oscillator, you can actually combine it with a trend indicator like a moving average or some kind of Bollinger Band to help you to combine trend and oscillator. So generally there are a few kind of indicators or two big kind of indicators. One are what we call trend follow indicators, like example Bollinger Band, example moving average are trend indicators. So in oscillator, things like RSI, things like CCI, all these are considered oscillator. So today we want to focus on RSI. How can you use RSI to help you to look at the charts? Number one, okay, how you can use RSI is you can look at firstly the overbought and oversold. So in RSI, the overbought is 70 and the oversold is 30. Anything above 70 is considered overbought. Anything below 30 is considered oversold. So that is looking at the overbought and oversold region. The second thing what you can look at is whether it's above or below the 50 line. So this is the 50 line over here. I'll just draw a line over here to show that this is the 50 line. So generally, above 50 means it's bullish, below 50 means it's bearish. Okay, so that's the second one. And thirdly, you can use it as a form of divergence. Okay, divergence, I'll go into more detail what is divergence. So firstly, overbought, oversold. For overbought, oversold, what you can do is you can use it when the market is not trending. Okay, it's going to range bound, okay, go to sideways. That way, this is where you can use the indicator for overbought and oversold. Okay, just to share with you, the standard setting for RSI is usually 14. Okay, 14. That's the standard setting for RSI. Most people just use the 14 for that. Okay, so overbought, oversold is used when there is a range bound. Okay, looking for market to range bound to buy. Okay, so first thing first, let's say example when the market go into range bound like this. Okay, this part over here, you can see it start to go to sideways and range bound. Okay, so you can zoom in and see. Okay, like example, when it's sideways like this, from here to here, this part is considered range bound. Okay, here is considered downtrend. This is considered uptrend. So somewhere in the middle is considered range bound. So from here, you can see during the range bound period, where is the oversold period. Okay, so example over here, you can see the oversold period is somewhere here and here. These are the oversold region. Okay, these are the oversold region over here. So generally, I don't really use 70 and 30 as a overbought, oversold as a buy or sell signal, because in a uptrend, in the trending market, when the market is going up, it can remain overbought and oversold for a long time. Okay, let's say the market is going sideways, then it's okay. Okay, it doesn't go to overbought, oversold. But when the market is trending, let's say example over here, when the market is trending, from here onwards, you can remain overbought for a long time. So if you assume that once it's overbought, you want to sell it, then you'll be caught on the wrong side of the trend. Okay, so like example over here to here, it can remain overbought for a long time. Similarly, it can also remain oversold for a long time. So example over here, it can go into oversold region. You can go to oversold region and then remain in the oversold region for a long time also. Okay, so if you just use overbought and oversold as an indicator to buy and sell, then it may not work so well. Okay, so second thing is RSI 14 tend to be slower. So if you're looking for it to dips, okay, just looking for dips, it may not give you the oversold rate price. Okay, example here is a dip on the uptrend. Here's a dip on the uptrend, but it doesn't give you that oversold. So what you can do if you want to insist on using RSI is you change the RSI setting to a smaller number. Let's say, example, you change it to 3, okay, 3 RSI. Then from there, you can see the dips, okay? Combine this with a moving average, and then you can see the dips on the price. Okay, let's say, example, I put in another moving average over here. Okay, another moving average over here. So let's say, example, I look at the trend. I look at 20s and 40, the standard setting for reading trend, 20 and 40 MA. So once I have these two lines, 20 and 40 MA, and let me change the color also. So let's do the 20 MA as red in color, okay? So that you can see that. Okay, so this is the 20 MA and this is the 40 MA. So what you can do is if you want to use it like an oscillator for trending market, then you can use the CCI but change it to 3. So RSI 3 is similar to CCI 5. And then from here, you can look at the dips. Okay, so from here, you see the price come down, it goes to oversold region, then there is a dip that you can buy on the trend. Okay, similarly over here, when the trend is up, it means the 2 MA are sloping up, you want to look for the dips, you can use the RSI to buy here. Okay, similarly over here, when the price goes up and it's trending up and you want to look for the dip, then you can look at the RSI to dip to buy here. It functions a little bit like my CCI 5, which I always talk about it. When you go to overbought, oversold. Okay, so that is another way of looking at overbought, oversold in the trend market. Okay, so let's say example right now, I want to use not just the overbought, oversold, I want to use it as the standard way, the 14 way. Then what can you use it for? Preferably not the normal overbought, oversold, because I will change that setting to 5. I will use it as a trend following strategy. Okay, so what I mean by that is when the RSI 14 is above 50, then it will be a buy mode. So from here, you can see it's above 50, I'll be a buy mode. And I'll remain the buy until it drops below 50. So like example over here, when it dropped below 50, then this will be my sell. Okay, so if I do that, I'm able to ride a long uptrend from here to here. Okay, so for RSI 14, usually I don't use it as oscillator. I use it more for trend following indicator, but I look at the 50 line to determine my buy and sell. Okay, so from here, I can look at here and remember to catch certain part of the trend up. Okay, this works for different stocks or even index. You can apply it on your own. Okay, the last one, what we can use it is what we call divergence. Okay, divergence, generally, again, I don't use it as a entry. I enter it more as a way to read the market. When is the market running out of steam? So what I mean by divergence is when the price continue to hit higher, and then the indicator over here start to dip lower. So when you start to do that, it tells me that the price here, and it's going up higher, is running out of steam. So it's running out of steam. Possibly there may be a dip down after that. So that is how I use the divergence. Okay, so but again, I share with you that I don't use it, the divergence, as a signal to sell. I just let me know that right now the market is losing momentum. Maybe I want to tighten my stop, but it's not an indication to sell. Okay, so to summarize again, for overbought, oversold, I will usually not use the standard setting 14. I will change the setting to maybe 3 to help me to look for dips. Number 2 is if I want to use the standard setting 14, I will use above 50 as a bullish signal, below 50 as a bearish signal to tell me to use a trend following indicator. Number 3, if I want to use it a divergence, I can see the price versus the indicator. If it's showing a divergence, that means the price is going higher and the indicator is going lower. That may tell me that the market or the stock is losing its momentum at the moment. So I use this to help me to have more insight using a oscillator such as RSI. Hopefully this video has been useful for you. See you in the future trading videos.